Hello friends, welcome to another video. In this video we'll be going through the double bottom pattern and how we can use it to trade in binary options. Make sure to watch the video till the end since I'll be sharing some important tips. I'll also be showing you some live examples. So in the previous video I showed you how to use the double bottom pattern. So if you haven't watched that, I leave the link in the description. So what is a double bottom? A double bottom is basically when you have 2 points at the market that form something that looks like a W. So basically a double bottom forms in a downtrend. So we have lower lows, lower high, lower low, lower high, lower low. But then at this point, lower high, we fail to break the previous lower low, but instead we break the previous lower high right here. So this point right here, we call it the neckline, and then we have a resistance down here. So from this point we now expect a reversal of the market, and we are expecting the market to move in an uptrend. So from this point it will be forming higher lows and higher highs, just like that. So this is what we call a double bottom, these 2 points right here. And with that, after the reversal, we can expect to take our trades with the direction of the market, which is now up. So we expect that the market will now start moving to in an uptrend. So as you can see in this image right here, we have our 2 bottoms right here. So these 2 points are our double bottom. Then this resistance line right here is the neckline, and after breaking that, we expect the market to continue moving in an uptrend. So now I'll teach you how you use the double bottom to trade in binary options. So as you can see here, the market was moving in a downtrend, and once we got to this point right here, the market created these 2 bottoms right here, which we call the double bottom, and we had the neckline right here, which was the previous lower high. And once we broke that at this point right here, that was a confirmation that our double bottom was valid and that we can take trades using that pattern. So what we look for when looking for our entry, we look for a beautiful for a demand area, sorry. So right here we have this demand area. We have this demand area, and we expect that since now the market trend has changed, once the market comes back to this demand area, we can take a trade for one minute. In this case, we'll take a trade for 1 minute, and as you can see, if we could have taken a trade right here, we'll have closed somewhere right here, and we will have won the trade. So if you're using this strategy, make sure that the timer is on flag mode and you set it to 1 minute. So with that, let me show you some live examples. Okay, I just found an opportunity. I took a trade with the buyers. So let's see how the trade closes. So that was a winning trade. So let me show you why I took the trade. Okay, right here we have these 2 bottoms creating for us a double bottom. Okay, it doesn't have to be perfect, like it doesn't have to be a straight line. So we have these 2 double bottom, and then we broke the neckline with this wick right here. So once the market came down to our demand area, I took a trade with the buyers for 1 minute. It was a winning trade. So we won the trade. Okay, we won that trade. So we had a downtrend, as you guys can see, and we had these two double tops, right? Double bottoms. We broke the neckline, and then we had this supply area right here. When the market came to our entry, we took a trade, and that was a winning trade. So thank you for watching, guys. Make sure to follow me on my Telegram. If you want to learn more, you can message me directly. The link is in the description. So let me see you in the next video. Bye.